Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the stock market, the crypto market, the NFT market, and any other market where we might be able to make some or a lot of money on the internet. Load up discussion today. We are talking about saving our money, not just trying to make it. Prices are falling. Bitcoin falls to 89K as more liquidations go across crypto. S&P is down 2. Investment points to think at the Japanese bond market. So Legendary will touch on that in a moment. Meanwhile, gold and silver march to new all-time highs again as Hyperliquid is tanking at the moment towards $20. There's been a very significant decline overnight. Not an ideal start. We'll talk about what's going on there, some ideas about what is causing that decline. Brad will get into that, and I will touch on the Danish pension fund announcing the exiting of US bonds as the rhetoric at Davos is kind of turning against the US, live in action at the moment. This kind of conference where the world leaders are meeting to discuss things, we will touch on that to the extent that we are able to. We also got to lay some price action in general and some general market thoughts, so stay tuned for that. I've got Legendary and Brett in the co-host seats with me today. We are ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky. We do not know anything for sure, unfortunately, and it's more risky than ever. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it's Wednesday. It's the 21st of January. How are you doing? How are you feeling today?
GM, it is an interesting time in the market. So interesting that it went through my AI coding and agentic work, and I am now watching the markets more intensely because I'm not ignoring them anymore. And we have a ton to discuss in this show. Like, there's so many things happening. The Japan situation is interesting with the snap election being announced, gold ripping through 4.8K, and all the other major headlines as well. It's a packed show, I would say, and I'm excited for that.
It's a huge variety, a lot of stuff that's going on. Trying to pass through and figure out what is the meaningful part to focus on is quite challenging. We're going to do our best to do that. One thing I want to ask before we get to that stuff, because we do have a lot of interesting stuff to talk about. I wanted to bring to the table a losing trade that I did in the last few days. Obviously, we congratulate ourselves pretty politely when we make our excellent calls over the last 12 to 18 months in particular. I think we do that in a polite manner. But sometimes we also don't get things right? Like we don't always get things right at all. And I pressed the bid button on Bitcoin and Hype not long ago. I decided to exit that. When was it? Not after the first drawdown. So I experienced like one decent drawdown, but before this drawdown. So like there was the first drawdown where Hype went from like 26 to 24, 23, somewhere like that. I think I sold around 23, Bitcoin down from like 96 to 92. I think that's what I sold. And then obviously it's done the second drawdown, 92 to 89, Hype from 22, 23 down to 20 now. So like another 10, 11%. And I just wanted to talk about it. I think, again, it's an incredibly hard market right now. I had been preaching patience before. I thought, oh, why don't I just buy two assets that I want to LP together? I don't know, printed a decent amount of LP fees, turned it all into gold, made a little bit of money there, but like it's nothing compared to when you have a sizable, this was a sizable position in both. So it was like a decent drawdown for me, but also managed to a certain extent. One of the things I just wanted to talk about, the psychological way of thinking about this. I know some people like really beat themselves up when they take a loss. I think I've got too comfortable the other way, where I'm like, if I lose a bunch of money, but I think it was better than losing more money, then I actually feel pretty calm. Like, we talked about my Hypercat, which I bought at, I don't know, $65,000 after I made a big win on XPL. And I sold it, I don't know, like 57, 58. Because I was like, what am I doing? I would rather lose 7 grand here than lose loads if this goes wrong. And I want to protect my gains from the big win, which was much more than that. And it was a great trade. But I'm getting quite comfortable with these things where it's like, great trade, I lost money. and I'm happy with it because I didn't lose more money. I don't know if this is a bit of a
Great
silly one to
trade.
get comfortable with.
No, I mean, so it's a great trade because you feel like you identified a bad trade. Like that's.
But
like,
I think there might be. Just check you're on the right audio. I think you might not be on the right microphone from the way you're coming. You good?
Oh no, definitely not.
Come on, Ledge. You come in first before Brady. You ready?
How about now?
Oh, way better.
Oh, yeah. That's
Hello.
good.
Okay. Yeah. So it's you identifying that, or you being happy that you've identified a bad trade, right? Like it's a little bit of a post-nut clarity. There's like, what am I doing? Like I'm better than this. All right, I'm getting out. I'm done. I'm resetting, and then things are good. So like it's like yeah, you're learning from your mistakes. Like there's good in everything that you can have, kind of thing.
Yeah, I honestly think this is something I've learned over the years in the space. Minimizing your losses is as important as minimizing your losses and preserving your gains. Like it's just so crucial to keep compounding over the years as you continue to try to build your capital base in the space. So I just wanted to bring that to the thing. Yes, we lose money sometimes. Actually, for the Hypercat one, it was fantastic way to lose 7 or 8 grand. This one, I don't know. I'm less confident now, but I also felt like, maybe we go back to 94. I actually really cannot read what's going on in the market. It's so volatile. I don't need to participate right here, right now, which was actually my previous message. I went against my own message before. Ledge, curious for your thoughts or reflections on this kind of market and how you're approaching like making money versus preserving money at the moment.
Yeah. English put it wonderfully in the YouTube comments, saying that it's a great sign. Managing losses is more important than maximizing gains once you have a decent stack and you have something to protect. We all have something to protect now. So this is the more important thing. And cutting your losses is something that's probably emotionally harder because you're like, it might come back. Maybe this works out. The Hypercat still could come back if only hype goes back to all-time high. And this is why I think it will. Whereas like cutting the losses and moving on is the harder thing to do. And also comes with the upside. If you do that, then you are open to think about other things. Like if you keep your Hypercat and watch it bleed out or bleed to death or whatever metaphor you want to use for that, you won't be focusing on catching the gold trade. You won't be focusing on the defense drones play, which I can't recall the company's name, which you talked about on the show. So it also like frees you up emotionally to focus on other stuff.
Yeah, I like that point. Holding on to things which are just a drain, an intellectual drain, where your brain is then. This is the thing people don't understand about airdrops. Like, I'll just hold the airdrop. I will, and if you were to hold all airdrops that you received, then your brain is subconsciously monitoring all of those prices all the time, and you can't operate and look forward because you're still monitoring this previous set of tokens that you've received. So you've got to be. I think that's the right way to think about it. But go on.
Not selling. Yeah, I was just like like something that's helped me go through it. I don't do it as much as I should, but the mental exercise that I try to go through is like, if not selling is the same as buying if you own something, right? So it's
correct.
like if you look at what you have and you look at the current prices and you decide not to sell, you are effectively saying, or you should go through the exercise of, would I buy right now?
Yeah.
Right. Like, and that usually helps you make the decision of like, man, I need to get the hell out. Cause no, I'm super scared. Like, I don't want to buy right now. I want to get the fuck out. Like that usually helps push you towards the decision that you ultimately think you want to make, and lets you get a little bit of insight into like how heavy something might actually be on your mind.
Absolutely. Yeah. I really like that idea. I mean, the one counter to this is obviously you can't just keep flip-flopping and like sell the low now.
People do all the time.
Buy back. It goes lower, sell again. Then it goes higher, you buy again. Then it goes lower, sell again. Like that style of cutting your losses is bad because you literally cut yourself down to zero.
Yeah, you chop yourself up. But I mean, like Keyboard Monkey is notorious. Like that, he made his entire career on Like he literally flip flops over the course of a night, going long tonight, and then the next morning it's like, oh, I'm short. You guys are doomed. Right? Like that's like, so like there's a gift to being able to like
Yeah,
update your
there is.
perspective on
There
new
is.
information. But if it's purely just like, yeah, so raw emotions, I think, yeah, it's probably less useful.
Indeed. All right. Well, I hope that's a helpful little reflection. We try to be, reasonably transparent on the show to talk about the stuff that we nail. And we've got like a lot of the mega trends right, I would say, or have managed to ride the waves. I think maybe that's the best way to describe it. Right now, I don't feel like there's a wave. There's no wave to ride. I was saying that the other day. Like first you had ETH in 2021, then you had Sol, then you had Hype. There's no wave right now. It's just it's an earthquake going in different directions. And so just brace yourself, just relax, do some nice things, focus on the business, stay allocated to some of the things that you're most bullish on maybe, but man, this is not a wave at the moment is my view. But look, we'll discuss the market more now. Let's get you up to speed with everything that you need to know from the price side and all the news from the last 24 hours. We've got Bitcoin down a couple of percent to, we dropped a little bit further, 88.7K now. It's down 6% on the week. ETH is down 5%, broken 3K down to 2.9, down 10% on the week. BNB is down almost 5% as well to $869. XRP is down to 189. Sol's down 1% to 127. And as we said, actually, let's touch on Monero's down 12% to back under $500. Zcash is down a couple of percent to 360. It was as high as 700, right? At one point. Hyperliquid is down 9% on the day to $20.70, down 20% on the week. Pretty aggressive drawdown. On the meme coin side of things, we've got Doge down 1%, Pepe's down a couple, Pump's down a couple, Pengu's down 1. Strange day. How can all these meme coins only be down a couple of percent when Bitcoin's down like a couple as well? I don't know. Sometimes they don't actually act as leveraged exposure anymore in a way. Like ETH is down 3%, Rect is down 4%. Okay. That's interesting to note. Getting into the headlines themselves is super interesting. We've got like an eclectic show today. Bitcoin is falling. More liquidations across crypto. S&P is down too. But Besant is suggesting that, look, this has got nothing to do with Greenland. This is suggesting, the Treasury Secretary is suggesting this is to do the Japanese bond market. So Legendary will touch on that in that direction a little bit later in the show. In that headline, we'll talk Hyperliquid dropping 9% on the day. In a little bit as well as all kinds of explanations for why the best perp dex in the space is on the way down. And we'll talk about Danish pension fund announcing their exiting of US bonds as the rhetoric at Davos is actually turning a little bit against the US, and the EU seem to be standing up for themselves more than they have done before. So let's see how that progresses. We'll share some information there. Interesting to note, notable price action, the Seeker token for the Solana phone is up 60% after the TGE. It's run to more than 100 mil FDV in the last, after it TGE'd yesterday. Axie Infinity is up another 20% again. Notable sales, this Xcopy vault on Gondi, a vault of 3 Xcopy pieces sold for 72.5 ETH, which I'm pretty sure will be a good deal if all 3 of them were in the same vault. Meanwhile, the CryptoPunk floor has dropped to $80,000 with the ETH decline, right? That happens when ETH gets weak. The dollar value of CryptoPunk gets weaker as well. I said market bottom at 50K CryptoPunks. Let's see if that is the case. Sailor Strategy announced, MicroStrategy announces $2.13 billion buy of Bitcoin again. Price tanked straight after he bought. Thanks for that, Michael Saylor. Vitalik suggests change to distributed validator technology to reduce single points of failure of staking. Chainlink announces 24/5 US equities stream so markets can operate beyond traditional trading hours. This extension of trading beyond usual trading hours is something which is happening. Obviously, we had the news yesterday that the New York Stock Exchange will be building their own 24/7 trading on-chain solution. Mike Novogratz's Galaxy Digital plans a $100 million fund with a crypto focus. The Supreme Court has once again decided against ruling on the Trump tariffs for the 3rd time. It's a bit of a, I don't really know what's going on there, to be honest. I think it's a bit of a joke. Infinex announces TGE for January the 30th. That's only 9 days away. So that'll be interesting to see. Crypto payment card transactions up 22x from December. That was from December last year. December 2024. So that was an interesting report on the block. And World Liberty Fight announces its first annual forum on February the 18th at Mar-a-Lago. Maybe that would be an interesting trip for crypto investors. That's the roundup. That gets you up to with everything that you need to know in the last 24 hours. Very, very big variety of things spanning crypto, politics, traditional assets, stocks. Before we get to the main stuff, Ledge, what's catching your attention?
I am interested by many things, but one question that is top of mind: how often can the Supreme Court delay this? And it's also
I mean, it's a great question, but I don't think they're supposed to be delaying this in the way that they're doing it.
And even if you look at Trump's social media posts, he's been pretty vocal about the fact that he said it would be a complete mess, almost impossible for a country to pay. It would take, quote unquote, many years to figure out what number we are talking about and even who, when, and where to pay. So it strongly, for me, the insinuation here is that we are delaying this decision and everything which is to do with tariff refunds as much as we can, that the next president can then worry about, and it's not on his agenda anymore. But I wonder what the legal framework is for.
Well, so you think based on his tweets, he's just moved on? He's just like, yeah, they're not going to say anything. Is that what you're kind of taking away from it?
No, I think he's going to come back to that. But he was like pretty clear saying it was going to take many years to figure out. So he seems to be pretty confident about that. But immediately as I was speaking about that, I also saw Funky's hand go up. So I'm curious to hear from our US correspondent on this matter.
Bring it in, Funk. What do you have for us?
They can delay indefinitely. There's no set thing. There's no precedent. Typically, they will make their rulings before the end of a term because they really kind of start in October and they go to like the summer. So theoretically, they could go all the way until the summer. And then they could just eventually get there and say, man, we're just dismissing this. That's their right too. So, yeah, I've been saying this all along. I don't see them not ruling against Trump because, again, he installed most of the current SCOTUS folks, and not answering is just as good as giving him the thumbs up in some sense.
Yeah, that makes sense. Also, as we spoke, I saw Stats requesting to join us as a speaker. So Sam, curious to hear your thoughts on that as well.
I don't have strong thoughts on the Supreme Court. I don't know a lot about their inner workings. The idea of delaying forever seems weird to me. I'm not sure what the precedent is. Is there any precedent for that, Funky? Are there cases where, and they see a lot of cases, are there any where they've just delayed it, like a NFT founder delaying an airdrop?
That's the precedent they're using, Sam. It's like we've seen these NFT founders. We kind of like that precedent.
I've heard a couple of them on Mad Lads. So
Funk, did you want to come back on that? Any precedent?
Not that I know of, in terms of just like one doesn't immediately come to mind for as long as I've been paying attention to these things. Not that I'm some avid SCOTUS watcher or anything like that, but
I mean, the fact that Trump has moved on that's just like par for the course. Dude's like a squirrel. He just chases whatever acorn's in front of him. Like, I mean, we took over Venezuela and I haven't heard him talk about Venezuela. I mean, are we just done talking about Venezuela after we took it over? It's like, he just moves on to the next thing. He's now focused on how much European leaders are terrible, I guess.
The longest.
Yeah, I think it'd be hard to continue talking about the one thing because there's so many other things that this is what we've been saying on the show. Like, there's just headline after headline after headline in completely disparate areas.
It's called muzzle velocity. It's just like the idea of just you keep your mouth moving, and eventually people focus on something new, and no one even knows what to focus on. And it's almost a strategy. It's a long-term strategy. This is not new.
Yeah, not surprised. And
Really trade.
I do think, coming back to the Supreme Court, yes, it's very, very odd to me. Very, very odd to me. After I don't understand the inner workings of the US legal system, but it is very odd being from the UK legal system. If someone says you're going to do something on a certain day without giving any sufficient reason, I think it is strange. But Ledge, did you want to?
It is not like a monolith opinion. It's very divided between two guys who 100% will do whatever Trump wants, three people who will do whatever he doesn't want, and four people who kind of go both ways. And it's the U.S. Supreme Court has extremely divergent opinions within it. So it's largely about those like 3 or 4 people who, many of whom Trump appointed, but who have occasionally kind of gone against him, whereas 2 or 3 will never go against him, and those are the ones. So it's not like this is one big entity that's just deciding the whole. It's the tensions within.
And you'd really hope not, right? Because the whole justice system is, in essence, compromised. If that was the case, you'd hope that the legal profession has a bit more integrity than just to completely roll over in one way. But maybe that's the trajectory we're going on in general with what's going on in the Fed as well. So, Ledge, was there something else you wanted to point out before we get to the main headlines?
Yes, there is another thing. Nothing to do with Roundup, but I found that interesting. Found it interesting nonetheless. Going back to the agentic side of things, this is coming from Remotion, which now has agent skills for Claude Code. What that means is basically that this skill has become the 3rd most popular skill in the entire skill marketplace, and it is a set of knowledge that Claude Code can pull from if you give him that skill, and it can do videos like that. Even the video that they did for that announcement was done by Claude Code using that skill, and I saw quite a few people starting to use that. Played around with that myself this morning, and it produces really nice results. Pretty impressive, because Claude did not natively have that capability to execute video production to this level of quality, or teaser production.
Unbelievable. This is something we want to keep an eye on, very much so. We've been building some stuff internally using Claude, and it's pretty incredible how we're streamlining things and the efficiencies we're achieving. Maybe we'll package that up in some way and roll that out to help some other people too. Brad, do you have a view on this, or is there anything else that you wanted to touch on in the market before we get into the main headlines?
With this, it was honestly only that I finally did my first Claude Code project yesterday, like trying to train the muscle of like a maniacal task that I've been doing for literally months to about over a year now, to like, all right, I'm just gonna build a spot tool for this. And it was like as simple as, I'm a little bit anal about cleaning up Telegram, where I have so many chats, it's impossible for me to like quickly look at something and decipher if it's, no one renames it, right? It's MegaETH X this, MegaETH X that, MegaETH X whatever, and it's all just letters, and I hate having to read it and search. So I always replace the icon with a little like split logo of the 2 things. So I just spun up an app that lets me like drop a couple of logos and it spins it up and does whatever. It took me, I don't know, hour, but like it was just a process of like going through it, looking at some of the things that I've bookmarked to understand how to do it, and then like actually setting up my instance so that now in the future I can do other projects quickly. So like just to train the muscle, continue to like how to think, how to work, how to do whatever. I actually did it through Google's IDE, anti-gravity. So I can have like Gemini on the side, and I'm talking with Gemini Pro for planning and doing all that stuff. And then I have them pump it in through Claude, so that I have the 2 working together to make sure that I can like properly plan out something and spec it and not make it look ridiculous, because I don't want AI vibe coded looking stuff. So that was really cool. Minor thing. Outside of that, man, I have been able to pay attention to shit. It's so much work getting ready for the global stress test stuff, which kicks off tomorrow for us. That
we mentioned that on the show yesterday. Do you want to just explain what's going on there? Because I think that is super interesting. Then I've got one thing before we get to the headlines.
So we're trying to put on a show for everyone and demonstrate that, right? Like there's a common refrain that the switching costs is only really justified whenever there's a 10x improvement over the thing before it. And we want to try to demonstrate that like there's still a 10x left in crypto, basically. So if you look at the current landscape of how things perform, it should be pinned to the top. If you look at the current landscape of how performance is handled, we're going to take Mega. We're opening the actual mainnet instance. We're going to allow people to play one of 3 games, or like things. One's Smasher, which is a little like crash game. The other one is like an on-chain Pokemon. It's like every move is on-chain. Another one is Crossy Fluffle, which you guys have already played back in the day on testnet. But while you guys are able to come in and play on it on mainnet, we're on the back end, we're pumping between 18 and 35,000 TPS, but like swaps and transfers and a bunch of shit to try to make it organic. just to show you guys that like even with this crazy amount of load, which like again, if you use base as a comparison, base's TPS top is like 2,000. Whenever they really push themselves for a burst of a few seconds, it can hit like, I think 3,000. So like we'll be sitting at roughly 8 to 10x that consistently on the back end, and it should still be fractions of a cent. It should be instant. It should be whatever, just to showcase that like, man, like there is still another leap left for everyone. And then we'll have mainnet shortly after it.
Very interesting. Really looking forward to seeing all those transactions, man. It looks exciting. Excited to see the comparisons with the other chains. So we'll see how it goes. You'll update us when, probably on the show on Friday, I guess, on that. One thing I wanted to bring to the table before we hit the headlines was this article from Citrini Research. At Citrini7 is the Twitter handle, called The Broken Promise. Citrini is like one of the go-to equity analysts, I have learned as I've started to get more into stocks. Makes outstanding, or has got an excellent track record over the last few years. And their suggestions for 2026, I think, are already up like 15% or something, maybe a little bit drawn down since the initial pump into January has a little bit of selling into that most recently. But there's an interesting article published yesterday which had no specific kind of buy indicators or suggestions, but it was on this concept of the broken promise, where the article argues that there's this trend of companies remaining private for extended periods of time, and the fact that that's happening is undermining the foundational promise of American capitalism, where ordinary people could participate in the wealth creation of transformative businesses through public markets. One of the examples he gives is like these young people who maybe just were buying Apple stock when they were young, and there's like actual stories of people who were buying Apple stock when they're young and turning that into a lot, or Amazon, which went public relatively quickly. What didn't IPO at astronomical valuations, but they would go public, and kind of that meant that the normal people would have access to these transformational companies. Of course, you got to find the company. It's not straightforward to identify, find, and then buy, but at least it was there at a reasonable valuation. Now the trend has obviously become a humongous bear moth. Before you go public, stay private that whole time. And what that means is you don't get a chance to access it until, and in essence, what happens is like the IPO moment kind of becomes the TGE moment in crypto, where it's just like an exit liquidity moment. It's like all those people who are in from early get to exit higher up, and it's the public buying the top or something around the top. Well, that is the argument that the article is making. And what that is doing when people like OpenAI, Anthropic, and SpaceX are going to be pursuing this type of strategy is their argument is that it exacerbates inequality and it resembles some type of regression back to feudalism, which, we've been kind of chatting about, like this kind of techno-feudalism, the concept that the middle class is a historical anomaly. And we're going back to that type of societal setup. So I thought it's a very, very interesting article. I read it this morning, and I would encourage you to have a read. Fortunately, there's no buy indicator at the end of this. It's one of those things where it's just like, oh, it's kind of annoying that the best companies you will not get access to. Your only alternative is to figure out a way to get access. Obviously, you have platforms like Echo now and Legion and other types of things, but it's still the caveat is you've got to be above a certain net worth in the States. There's all these kind of restrictions on who can participate in these public in these initial raises. So that's also not straightforward. So I don't know what the exact answer is here, but I'm curious for your guys' thoughts on how I describe that.
I remember what you said back in November. We spoke about this when I had this post by Based Carbon. And he was back then saying exactly the same words. Another part of the broken social contract. Boomers got to buy Apple, Microsoft, Intel, Nike, Home Depot, Amazon, eBay at 700 mil, Amazon 430 mil. Average return on all of these were 4,175x. And our generation does not have that. And back then we concluded, well, we have other things. We had crypto. Boomers did not have crypto. So it does not have to be the same asset class. And I would come back to the same conclusion we had back then.
True. I like that personal responsibility, which is like, look, you can't necessarily look at the same things and say, why don't we have the same thing? It's the same thing with house prices, right? It's like, oh, you guys got to buy a house at 50K. Okay, well, our generation got to buy a Bitcoin at 50K. We might very well be going back there at some point, which is not ideal. If this analogy or story is meant to play out, or if this argument is to hold strong, but there will be different opportunities for our generation. Something still, I still think this kind of social contract is off a little bit. Brad, curious for your thoughts. We'd love to bring Stats into this conversation as well in a second for his thoughts with his experience in these kind of markets.
I don't know. It's just Citrini just sounds like Web 2 Kobe. I guess is my takeaway. Like we had this exact conversation. It was literally the exact same thing that we had for inside the crypto industry. It was like, oh, back in the day, there was so much wealth and DeFi summer, everyone did the thing and you get access to the stuff and you do the thing and you get the return. And then now everything's captured in the private market. And in order to get access to that, you have to be an accredited investor and blah, 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 blah. Same shit, identical. It's just now broad market instead of inside of crypto. So I don't know that I have a solution for it other than like, yeah, you need to find ways to get access to these people and they need to be made aware that this is a problem and it's like net bad for everyone. Yeah. I think, or I try to think about, okay, like there's a reason they're doing this. Like what is like there, you are giving up something by going broad market raise as opposed to specific VC raise, right? Like you're getting a more pointed cap table, you're getting people with probably resources that can more directly help you, networking, like all this shit, right? Versus like if you just say, I'm just going to sell your IPO and we're just going to sell our stock to everyone, like those people aren't helping, right? Like yes, they're helping spread word of mouth. It's very similar to what's going on with crypto, right? Like we've done several raises as MegaETH, like as we've ascended, and that has helped us immensely by like getting our name out there, building a core community, helping growth, like doing all that stuff. But that's not the need of every single company. So it's a balance.
Okay, I think that's fair. And I completely agree with that. Actually, we've referenced that original Kobe article many times where he did the analysis showing how much of the value is captured in the private market now. And there's, you know, everyone's fighting for scraps in the public markets. Stats, would love to bring you into this conversation with your experience in TradFi. Any view on this kind of wholesale capture of value in the public markets?
Yeah, I mean, I don't know. I mean, I would be curious to see the analysis and dig into that. I mean, Goldman Sachs didn't go public, you know, was founded in the 1800s and didn't go public till 1999. Visa, yeah, became a huge company and was taking 2% or a piece of everyone's transactions and didn't go public till like 2008. And they've been private since 1958. Like there are a lot of big tech companies, just big companies that aren't public. I mean, Circle just went public at $30. It's already at $75. Robinhood was worth $10 2 years ago, and now it's worth $108. Like, what are we whining about here? Like, and we're talking about Anthropic and OpenAI. Like, neither those companies burn billions of dollars. They're like 5 years old. You know, I was at Uber. We didn't go public for 8 years. Then we went public and we 3X. Like, this just feels kind of like selective narrative building as opposed to like anything. I don't know. I feel like there's just like this whole tendency to talk about how everything's destroyed, but you can just look at the data. There's been plenty of opportunities to get involved in IPOs. Like the examples, Anthropic was founded in 2021. Like, why should they be public? Like Apple didn't go public for 5 years either. Like, what are we doing here?
Do you think it's just people get so fixated on the hot ones that they would love to be public, and then they just can't see the other data because, like, okay, everyone wants SpaceX, right? Well, SpaceX isn't public, and so that's all they can see.
SpaceX has been like spending the past many years like just burning investor money to send satellites into space. Like suddenly they've had their like moment where it's worked now, but it's not like because the product has finally come together in this Wi-Fi product, or in this internet access product and more. But it's not like a classic public company. And yeah, I mean, it just feels like there's this tendency to complain about everything and how this generation has it so terrible and how it's never been like this. And I'm just like, these trends are not new. A lot of like Circle just went public. Our biggest IPO in our space was Circle. Just went public at $30. It's at $78 right now. Like Robinhood, everyone's favorite company in this space, was at $9 in 2024. Like there have been tons of opportunities. You know, Uber went public at $30 and went up to $100. You know, Airbnb went public at half the current price. Like all these companies took 8 to 10 years to go public. Anthropic's only been around for 4 or 5 years. You
Yeah,
know,
these are
OpenAI
great
has
examples.
really been a thing for 3 years. Like it just feels like there's this tendency to say that this generation doesn't have the opportunities of before. And I think that there's a lot of truth to that. But like when I hear this, it just feels like whining because tons of companies have gone public that have made a ton of money for investors who got in the public markets. The example, I mean, Apple went 5 years before it went public back in 1979. And that's Anthropic's been around less than that. It's like people use the product and they say, I don't know. The whole thing, again, I would have to see the analysis because I'm sure there is some data to back this up. I think that the narrative also kind of goes along with what's been kind of a crypto bro narrative of regulators destroying markets and therefore no one's going public and therefore everyone's losing. I just don't know if it aligns with the data. I mean, private investors want liquidity. Like VC's been a terrible space over the past 5 years. It's not like VC's just like raking it in right now while everyone else loses. It's just a lot of
it's been hard.
yeah, it's not, this idea that
hard
there's this class that's raking it in a way that didn't happen 15 years ago. It doesn't really line up with what I've seen from illiquid investors, illiquid market investors, you know. But yeah, I mean, maybe it's just this whole. I mean, I have a friend who's at a company we're all very familiar with, and all his CEO talks about is going public every day, and he's like, we don't even have an auditor, like, you know, it's. So I'm seeing the opposite trends anecdotally. Yeah, just the whole narrative. I don't know. I don't really buy the narrative, but again, I can't say that without having seen the data.
Okay.
My guess is there are some analysis that backs it up. I'd want to see that and really dive in because these are not new trends. Like I said, like Visa's out there taking a piece of every single dollar any of us buy ever, and they didn't go public from 1958 until 2008. Like this is just not new.
Very, very interesting. Well, at a minimum, I think that some of those data points are very, very persuasive to make your point. So, well, we'll come back to it. We'll look into some of those numbers and we'll circle back at some point. Interesting way to kick things off. Let's get into the main headlines now, though, because we've got a variety of things. We're going to talk Bitcoin breaking down again, S&P down. Let's going to touch on the bond market. Brad will touch on Hype's decline, rapid decline now down to $20. And then I'll do a little bit on the Danish pension fund and what's going on with US relations in the EU.
Absolutely. Keep the market stuff sweet and short. Gold is up another 2%, up $105 on the day, which is an incredible move. It's trading at $4,866. Silver went as high as $95.50. Is basically flat on the day now at $94.60. BTC, as we said, is trading at 88.5K. And there is a couple of interesting things going on, including or starting with, I shall say, the Japanese bond market. So we have seen a jump in Japan's borrowing costs to all-time highs. The 10-year government bond surged 19 base points. That is over the last 2 days and is constituting the sharpest rise since 2022. 30-year yields, they've seen the biggest daily jump in the last 23 years. What also comes on top of that is that the prime minister called a snap election on Monday, which will be taking place in February. He did follow it up with some more positive messaging, saying that the Bank of Japan might be willing to step in and buy the dip as the demand for Japanese bonds is getting lower and lower. That also had an impact on the U.S. Treasury 30-year Treasury yields. They jumped 8 BPs to 4.91%. Just to get this up on a chart, which is coming via Reuters, the article I'm also sharing currently on screen, that shows this jump in the 30-year bonds, which we said is the biggest one which we've seen in a daily move in the last 20 plus years. This is that. Obviously, we still have the situation going on with Greenland, and Scott Bessent is making the point that the markets are not going down because of Greenland. He is blaming that on the Japanese bond market as well. Let's see if we can get this video playing.
I believe the markets are going down because the Japanese bond market had a 6 standard deviation move for the past 2 days. That would be in their 10-year bonds. I've been in touch with my economic counterparts in Japan and urged them to take the necessary measures to stabilize their bond market, but that's spilling all over into all bond markets. German yields are up, French yields are up, US yields are up, again, it's mostly the Japanese bond market, got nothing to do with Greenland.
We also do see a spike in the other US yields, UK, German yields, but obviously it is not as intense, it's not as crazy as the one which we've seen in the Japanese markets. A bit of additional context coming from the Kobeissi letter is that Japanese insurers did sell $5.2 billion of bonds with maturities of 10+ years in December. That is also the largest monthly sale since data began in 2004. And then this is also marking the 5th consecutive monthly sale. It's the longest streak on record. And over this period, insurers did sell 8.7 billion of long-term bonds. And we have another post by Batsubium saying, why is BTC underperforming gold? It is a discussion that we also had yesterday on the show with Stats in the interview part. And he's bringing up this piece saying that the global head of equity strategy at the Jefferies, the investment bank, they did remove Bitcoin from the greed and fear model portfolio, reallocating the full 10% position into physical gold mining and equities. They're saying there's a couple of concerns coming there, one of which is quantum computing as a threat. The other one is also, or as a result of that, saying that the long-term store of value thesis is in danger here. But then also he's basically saying that the government's crypto projects are adjusting to this. El Salvador is restructuring Bitcoin holdings. Institutions are restructuring, are moving more into gold, so that this institutional demand and hype, which we've seen for BTC, is fizzling out pretty quickly and is now shifting more into the gold buying side of things.
On the Japanese bond stuff, what's the key read for you here, Ledge? What's the takeaway for you? I thought on the Bitcoin side, I think no one really talks about the quantum threat enough. A lot of people are just trying to deny it or saying it's too far away. I guess the argument here being made is that it doesn't really matter how far away the threat is of something being zero. It's not a very compelling thing to buy if there's a number of some reputable people saying that it might be at some point. I think that's the argument being made. What's your view, and what's the key takeaway?
For me, my key takeaway is wait out the Japan situation, wait out the election there, wait out what's happening in Davos with Trump and the whole Greenland situation. I think it is similar to what we've seen in May of last year in terms of like a couple of weeks of extreme volatility in the market. We did see a correction there as well, which was way stronger than what we're seeing over the last 2-ish days. But I'm just happy to wait that out and see how the world looks like in mid-February or the second half of February. On the quantum side of things, I probably would push back on that more and say, yes, of course, there is a threat there, but you could make probably existential threats for the AI, for the robotics industry. And I think the market likes to be afraid of something that is more concrete, and that is now Greenland, that is now the Japanese bond market. And I think this is more driving the fear in BTC than necessarily the quantum computing stuff. At least this is also what I was taking when I did this analysis of this like 22 companies doing their crypto 2026 outlook. That was something that was standing out to me, that only one of them was worried about the quantum vulnerability or potential quantum vulnerabilities for BTC. For the other 21, it was not a topic. So I don't have like a large scale institutional read on that. My gut feeling says that this is probably not the biggest worry that they have when it comes to BTC right now.
Interesting. Okay.
It's
Red?
also just a time horizons thing. Like the fearing about that is also not too dissimilar to me like being crazy the last like 2 years about the security budget running out in 2032, right? Like it's like, yeah, like it might be a thing, but the road to like when it will become an issue is so unknown that like it's kind of foolish to worry about it now. And there's plenty of potential upside to be captured between now and there. So like same thing, quantum I think is like a 5 to 8 year window thing, bro.
Yeah.
That's a lifetime in this market.
I kind of think both things are true here. Like, I think this is a legit thing to have some concern about, but I also
Of course it
agree.
is.
I also agree that when Bitcoin's at 89, instead of 120, then people will talk about it. Whereas when it was at 120, no one was concerned about quantum then.
I think there are a couple things though. I mean, the first thing is that Bitcoin's pure value is that it's forever money. Like it's only kind of the only reason it's valuable is the view that we'll be able to have it forever, whereas everything else you won't. It's going to get inflated away or whatever. So I think when something's core value is something, the idea of it being a problem in 8 to 10 years is very relevant today. The reason this is being brought up right now is because Chris Wood, he's kind of the biggest like pop cult, like in the world of finance, like in the equity analyst or micro or macro strategy world, there are kind of like pop stars as far as their opinions. Like Chris Wood has been writing Greed and Fear since I lived in Asia, and then he was old. Like he's just like one of the. He has a lot of graphics. He's just someone where his work gets passed around and really digested. And I think in a world where we just spent the past year bringing on institutional investors, if this becomes a narrative I mean, it used to be like people could debate this out, on the stage at a crypto conference, and then everyone would kind of boo the guy who said that quantum was the problem. But right now, it's like, this is our new buyer. This is the ETFs. And if a guy like Chris Wood is out there starting to spread the idea of this could be a problem within that demographic, which is what happened yesterday. That's why it's being discussed now. And Chris Wood's also relevant because in the equity world, he was one of the first people to put Bitcoin on his portfolio allocation strategy guide, right? So he was one of the early adopters of Bitcoin within this world. And yesterday he wrote a report moving his BTC allocation to 0%. Because he's like, this is too big of a risk in 8 to 10 years for an asset class like this that I just don't want to have my clients in it anymore. And I don't know if you get the kind of like intellectual jousting at that level, and if it just becomes more of a thing where like these buyers don't understand Bitcoin in the first place, and now you got someone actually, I wouldn't do it. I wouldn't be as dismissive of this. I'm not sure it's like sell, but like I'm because I am familiar with this guy. I'm kind of familiar with that is our incremental player right now, and that I don't buy this whole thing. We'll worry about it later when the whole purpose of this asset is that you don't have to worry about it ever. It just, to me, it feels more existential.
I think my point with that is that the conversation is literally the same. Because like, again, it's the exact, and it was existential with the security budget. Like that is something that will fundamentally break the chain unless they make changes in the same way that they've. Now, quantum is obviously like a bigger threat, but it is in the same general direction of like this thing on a core level. If it does not change its course, is fucked, right? Like that's what it is. That's what stopped me, frankly, from wanting to even interact with it for the last like 2 to 3 years. But I like, as you've seen, what is it?
From interacting with what?
Bitcoin, the security budget issue, right? It's been the FUD point for a long time. It doesn't generate any fees. Like it's a nerd technical thing. It's just like fundamentally it'll like have to change its course or else it's fucked.
Oh, yeah,
I guess Sam's point here is that
that's also an issue though, right? Like that like these lingering access, and people say, well, then the bank system's screwed too. And I personally would just trust a centralized entity to solve these, where you have a couple decision makers who can say this is the way we're solving it, than a decentralized thing where you have these people who are wedded to the idea of no change, and there's just all these things. You have people from all over the world with different agendas. It's just decentralization feels harder when it comes to dealing with existential threats.
Indeed. Well, either way, excellent context on Chris Wood. I don't think that was fully brought through in the article that was shared. So appreciate that. Stats.
I mean, he's a joker. joker, but he's a pop joker, you know, like he's just someone who people love to trust and pass around. So
Yeah,
Yeah,
there we
joker
go.
with an audience. That's important.
Very, very helpful to know either way. Brad, we don't have much longer left. We've got 6 minutes. We've got to get through a couple of headlines, hopefully. You're going to do Hyperliquid, and then I'm going to do the other one, but give us everything we need to know first on Hype's decline, short-term decline, hopefully.
Yeah, I mean, it's a price point headline. So Hype is down. Everyone's trying to figure out why is Hype down. So you have a few people that analyzed it, and it's basically a push pull. We have here's McKenna who brought it up, saying that a lot of it is just selling that's coming from like the actual foundation selling is actually going through the DAT per. So like that actually shouldn't be a seen thing. A lot of this is basically just forced selling. Jez steps in and says it's not necessarily a narrative thing like TIA, where TIA was like the idea was that modular money was the thing that was going to win, and like it didn't actually matter if the product had any PMF. It wasn't actually a ton of usage. It was just a narrative that was much weaker than perps, which are semi evergreen, right? They kind of like memes kind of mold to whatever is like going on in the current day, because you can list any assets. Previously it was crypto when it's hot. Now we're moving towards equity perps. So there's a thesis there. And then I did my own little stuff, and I was like, okay, is this like a sector specific thing? Is perps like Hyperliquid specifically getting gobbled up? I put a link inside of our production chat, but there's like one is a dashboard. It's like, okay, is it losing market dominance against the rest of the perps protocols that are out there? And honestly, it's holding up pretty well. Like if you look at the, yeah, there you go, Doom dashboard. If you look at the dashboard, like the OI and the volumes of Hyperliquid are actually pretty static. You can see perps generally as a market or as a sector are down over the last few months or so. So like, is this a commentary on just that like risk on appetite is not really there? People keep getting liquidated, which obviously is not something that can be sustained long term. But you can see here we've leveled off mostly in Hyperliquid's open interest and volumes relative to the remainder of the forks. I don't want to call them forks, that's disparaging. Like these are other people that have been building for a long time, and they're all jostling for basically the dominant second player. That was interesting to me. And then so this tells me Hyperliquid isn't losing its dominance. It's still top 5 revenue generator the last 30 days. It's doing good. So then I went one step bigger and said, honestly, and this is, I didn't send you a link for this, when I went on Blockworks, I was like, how is the entire industry doing as a revenue generating wise? Like, is the perp sector experiencing a downturn, or is the entire market going down? And actually, I found out that 5 of the last 6 quarters, we have apps and chains have generated less revenue. So we have been on a broad downtrend for over a year at this point. That was worth noting for me. And then now it becomes like less of like, oh my God, like the perps. Yeah, if you go to revenue, do it by quarter, and then you can see, I just did it since 2023. You can like, you zoom in a little bit more. It's kind of skewed by early days. You can just see that like we've been kind of compressing the last year and a half, all down. So I think it's just like a market thing on us. Like crypto broadly is just kind of like less exciting right now.
Interesting numbers. Interesting dive into the data. I think that probably tracks with the previous market top, right? Like the Trump meme coin and all of the activity taking place then, maybe the first time Hyperliquid launched and the crazy run up of Hype when it went up the first time. And then, yeah, I guess there's been a broader decline. And then on top of that, aggressive competition for that #1 spot on the perp dex, in the perp dex market, although I think it's pretty consensus Hype is still doing the best there, but it's still, you know, it's got competition now, far more than it did at the beginning. So that's a factor too. Okay, Dav, huge amount of time. I just want to hit this final headline here. Maybe, well, actually just a final thought on the price action. I think there's, actually, I don't know if there's anything more to say on the price action, to be honest, just down aggressively. So I would not, personal thought, sitting with Legendary, to be honest. The world is going increasingly volatile. Just kind of want to sit this out and get back in when maybe things are clearer. That's the general thought there. Final headline for today. This is the news that the Danish pension fund, Academica Pension, is planning to exit US Treasuries by the end of the month. This was announced yesterday amid concerns that the policies of President Trump have created credit risks too big to ignore, although I suspect this has something to do with Greenland. They said the US is basically not a good credit and long-term. Sorry, the US is basically not a good credit and long-term. The US government finances are not sustainable. the chief investment officer told Bloomberg yesterday. There's been some takes on, this potential strategy. Avi Feldman, prominent trader, runs the 1000X podcast, said that European divestment from the US is an ongoing theme and will benefit European defense stocks substantially over the coming months. However, the reality is that outside of defense, all successful and well-run companies are based out of the United States. So regardless of how much money flees right now, it will find its way back to the US through exports and income anyways, which makes these sell-offs potential violent but short-lived. There is still no real other option. We could have a sizable pullback in equities. So that's the kind of lay of the land from a trader, to be clear, like a very successful trader who trades on a short-ish time frame, generally. And then Rhino as well, who's also a trader, had this to say: markets have a very clear narrative to focus on with Trump doing what he's doing, global trade instability and reorganization with US allies reaching out to China and India to replace the US. We spoke the other day about the meeting and the messaging from Canadian Prime Minister Mark Carney with China, and how some of the people who are obviously very traditionally very well allied to the US have started to reach out elsewhere and look for, friendship, sanctuary with some other people. That seems to be something, that seems to be some of the messaging. And just as Davos is taking place at the moment, there was clear messaging from Carney yesterday that they were not pleased with Trump, far stronger than maybe the previous things, right? Obviously, during the tariffs in April of last year, people came out. Actually, people were kind of receptive. Like, people might not have liked it, but they were kind of keen. There's that famous photo, right, of them all sitting around President Trump in the Oval Office. Now feels different to that, to be honest. I don't know whether everyone will capitulate in the end and still have Trump holding court and saying whatever he wants and getting whatever he wants. But they are presenting a bit more of a united, forceful front. You had Carney speaking out a little bit yesterday, and you had President Macron of France also similarly saying, just being a bit forceful back, unsurprised as his personal messages with Trump had been leaked the day before. Probably not the best way to just leak people's messages. And in response, at Davos, maybe Besson is always trying to play, he's actually not always playing peacemaker at the moment. He's very directly saying about the EU that they are funding the war against themselves by continuing to buy Russian oil. And he says that everyone should take a deep breath, do not escalate. President Trump has a strategy here. Continues to say, like, do not escalate against us. That would be the worst thing. But all things considered, I think the read here, as we've kind of mentioned already a couple of times in the show, is that this is volatile. This is unclear. This is very, very unpredictable. We do not have a read on how this specifically plays out. Everyone always thinks everything will be fine all the time. Maybe it will be. I feel like if you just go purely on the responses of the EU this time versus April last time, I feel like this is one time more, and therefore they've been through it once. They tried to be as amenable as they could the first time. And I think now they're getting a little bit tired of what appears to be an increasingly aggressive United States to their allies, or what they thought were allies. And so I think they're feeling a little bit hard done by here, even if there might be some truth to what's said in the extent that, okay, well, you can't defend yourself, and therefore you should just give it to us. Like, okay, maybe Denmark can't defend it, but that's still not the way necessarily that people would have expected allies to behave amongst each other. So same take as Legendary. In conclusion, we're in for some volatility and very, very unpredictable at the moment. But guys, we run over time a little bit today. Final takes here before we close out.
Trump arrived in Davos like 30 minutes ago. He is expected to give notes in 30 minutes. He has been silent on Truth Social for the last 10-ish hours. So I think now is the time to watch what he's going to say and how the world will react to that.
Okay. Well, let's tune in for that speech. Brad, any final thoughts?
I'm more interested in Levi, the top commenter of this video that we're looking at. He is the Mr. Beast of friend tech. He made his entire career around that and thought he was going to change the world. Now he's a washed up KOL.
There we go. Love it. Washed up KOL. Can't say the same for Trump. Trump is the top KOL at the moment, trying to put the economy, trying to keep the economy going up. But it looks like the stocks are struggling here. But guys, that's the show. That's the show for today. We hope you found it useful. As always, just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X Video, YouTube, and you can catch us on Apple and Spotify podcasts as well, and TikTok for the increasing number of shorts that we're putting out. We hope you enjoyed the show. Thank you to Legendary Bread for co-hosting with me. Thank you to Stats and Funky for their contributions. We'll be back same time, same place tomorrow. Have a wonderful day. Take care. We'll see you tomorrow. Bye-bye.